cost plus pricing, also known as interchange plus pricing. There are essentially three aspects to pricing: transaction fees, equipment costs, and then everything else. When it comes to transaction fees, there are three models processors use: cost plus pricing, also known as interchange plus pricing, flat rate pricing, and discount rate pricing, also known as tiered pricing. This video will explain cost plus pricing. If you are unsure what interchange is, that is the cost, or how it works, check out our videos explaining interchange. Simply put, interchange is the rate that issuing banks charge for payments to be accepted from one of their cards. Cost plus pricing is a very simple billing method. It is typically recognized as the best pricing approach because of its transparency. There is nowhere for fees to be hidden. A business owner knows exactly what their processor's rate is above the cost, which makes for a very clear and honest relationship. If your processor is using a cost-plus pricing approach, as your sales volume increases, the rate your processor charges usually decreases. Let's get into the details. For every transaction, there are essentially two parts: the cost and the plus. There are two aspects of the cost: interchange fees and card brand fees, also known as assessment fees. While it is also called interchange plus pricing, cost plus pricing is the more accurate name. Interchange is used interchangeably with cost, even though that's not entirely correct. Interchange is paid to the card issuing banks, and card brand fees are a small fixed percentage paid to the card networks, that is Visa, MasterCard, etc., for facilitating the transaction. Processors have no control over these fees. Next is the plus part of the transaction. Processors charge a small, transparent, fixed rate for transaction processing, clearing, settlement, reporting, and customer service. As an example, the current interchange rate for a regular Visa consumer card accepted in person is 1.25%, and the card brand fee is 0.1017%. This card was chosen because it is the most popular credit card category and method of acceptance. In addition to the interchange fee and card brand fee, a processor might charge 0.20%. This would make the total rate for that transaction approximately 1.56% for a business to accept payment from that card. Of a $100 transaction, $98.44 would be received by the merchant, $1.25 would go to the card issuing bank, 11 cents would go to Visa, and 20 cents would go to the processor. Some credit cards have higher cost rates and some cards have lower cost rates, but the total rate you pay for each card is calculated the same. Cost, that is interchange and card brand fee, plus processing fee equals total rate. At the end of the month, you will be able to see your average total rate for all sales. This is called your effective rate and is the single most important number in payment processing. Learn more about effective rates in our next video.